Guys, this is probably one of my favorite videos from this series, as we're gonna unravel the purchase of 800,000, where we're gonna finance 95% of it. You're only bringing in $40,000. Your closing cost is gonna run about 12, so $52,000 is all you're gonna need. And income wise, you only need 140 and some change, 143 to qualify. Now, why this is my favorite video? Because it adds a little bit of hypothetical scenario in here. I want to show you guys like what would happen if you buy now with the higher interest rate, and then in a year or two you'll be able to refinance. Like many of my clients, man, I've been doing this for 9 years. There's been times where people were refinancing every 6 months. I bought my first property at an interest rate that was super high at that time, you know, and then fast forward a year later, I just redone it. So long story short, nothing in life is guaranteed, but if we look at some data and we look at some estimations, we could safely assume and speculate that what right now is at the peak, there'll be a time where interest rates come down and the government is going to want to stimulate people again. Inflation would come down. So what's 6.5 now, there's a high chance will become 4.5 or lower in the future. Now let's take a look at this scenario, and we'll look at some hypotheticals if you were to catch a lower rate in the future. So going back to our numbers, a $760,000 loan is giving us a mortgage payment. Again, this is principal, interest, and PMI, $4,925. I purposely left out the property tax and insurance because we're talking about potential refinance, redoing your loan, so we don't need to include those numbers because they don't get affected by the interest rate that you have. Now, $4,925. Let's say the interest rate became 4. Today it's 6,375, but what if it becomes 4? Then your payment becomes $3,811, which is $1,113 lower, or $13,363 lower per year. Now let's take it. I mean, this might sound aggressive, but I truly believe we're gonna see something in the 3 and 4s in the next couple years. I mean, this is a cyclical environment, so it happens. Now let's say the interest rate becomes 3, and then assuming the same loan amount, obviously at that time your loan will be smaller, so the payments will be even more lower, but for the sake of this video, let's keep it all kind of apples to apples. So $760,000 loan at 3% 30-year fix. Now the payment becomes $3,387. This is now $1,537 lower, or $18,453 lower per year. Guys, that's huge. But now the big boom finale of this. What does it mean in the terms of the loan? Like for the whole 30 years, how much do you really save when if interest rate drops? On a 30-year mortgage, on a 760 loan, interest rate 6,375, you're going to be paying $880,000 over 30 years. On a 4%, you're going to be paying $546,000. On a 3%, you're going to be paying $393,000. Guys, even if you hold on to this rate 6,375 for a couple years and you refinance in 3-4 years, even if you reset the loan again for 30 years, you're still going to be saving like huge amounts of money every month and in the long-term plan. I hope this kind of breaks it down like hypothetically. The next video, which I really want you to watch right after. By the way, if you're enjoying this content, please hit the like, subscribe, really helps out the channel. Leave some comments if you want me to maybe do a deep dive on a different price scenario. I do plan to cover more pricing. I just wanted to pick for the first series 800,000 because I feel it covers a lot of markets and it's kind of like a middle average number. But the next video, I'm gonna go through what is a refinance, how to do it, and how much does it cost. That's a very big question that even my clients now that are buying, they're already thinking. Like they might be first-time buyers, but I'm helping to educate them. I'm letting them know from my personal experience, from experience with my clients, that guys, like what you get right now you're not gonna have for 30 years, so don't even look down that road. So next video is about refinance.